Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Control, not just ownership, defines Web3's future. Texas Bitcoin Reserve Hearing, Symbolic move or game changer for crypto. Bitcoin trades in tight range as XRP, LTC, OM, and GT target higher levels. 12 U.S. states invest $330 million in Sailor's strategy. Argentine President Javier Milei faces fraud allegations over cryptocurrency endorsement. Control, not just ownership, defines Web3's future. The conversation around Web3 often centers on ownership, owning data, assets, and identities. Yet, the true driver of power in Web3 is not ownership, but control. As Web2 taught us, ownership without control is hollow, a facade without substance. The distinction: ownership versus control. Ownership is passive, but control is active. In Web 2, users own their content, posts, followers, and accounts, yet platforms retained control, changing algorithms, banning users, or disappearing overnight. Marcus Kunit, CEO of One.io, highlights that Web 3 must break from this model, prioritizing user control over data and interactions. Gaming, the Web3 control frontier. Web3 gaming exemplifies the shift from ownership to control. Here, players can create, modify, and monetize in-game assets across platforms. Decentralized autonomous organizations, DAOs, empower gamers with voting rights to shape game development, creating a more participatory ecosystem. However, some Web3 platforms fall into Web2's traps, imposing restrictive revenue models and limiting creators' control. This has contributed to the struggles of the GameFi sector, which performed poorly in Q2 2024. Despite this, the transparent nature of decentralized platforms may accelerate corrections and spark a GameFi revival in 2025. Web3, beyond ownership, toward true control. In the decentralized future, control, not just ownership, will drive user empowerment and innovation. Platforms that empower users to shape their digital experience will thrive. Will Web3 platforms embrace control as the cornerstone of the next internet evolution? Texas Bitcoin Reserve Hearing, Symbolic move or game changer for crypto. The Texas Senate will hold a public hearing on February 18 to explore the creation of a Bitcoin, BTC, reserve, marking a significant step for state-level cryptocurrency adoption. However, analysts suggest that unless the state announces an immediate purchase plan, the hearing may be more symbolic than impactful. Texas eyes Bitcoin as reserve asset. The scheduled hearing follows the recent submission of a Bitcoin reserve bill to the Texas Senate. According to Nexo Dispatch analyst Ilya Kalchev, while the move signals growing institutional interest in Bitcoin, its immediate market impact may be limited. State-level initiatives rarely drive major market moves unless paired with actionable policies such as immediate purchases, Kalchev told Cointelegraph. Bitcoin has traded below $100,000 since February 7, showing resilience amid global market pressures. Geopolitical tensions and Fed policy impact. Bitcoin viewer Uzi Zaid, COO at BitGet, highlighted that Bitcoin's price remains under pressure from ongoing US-China trade tensions and potential tariff hikes from President Trump. The US market remains the primary driver of Bitcoin's performance, with geopolitical concerns adding volatility, Zaid stated. Broader push for Bitcoin reserves in the U.S. Texas move aligns with a growing trend among U.S. states to integrate digital assets into their fiscal strategies. On February 6, Kentucky became the 16th state to propose a Bitcoin reserve, aiming to allocate up to 10% of excess state funds into digital assets. With states advancing digital asset initiatives, how soon could we see Bitcoin reserves becoming a mainstream fiscal strategy in the U.S.? Bitcoin trades in tight range as XRP, LTC, OM, and GT target higher levels. Bitcoin, BTC, has been consolidating within a narrow range, signaling potential breakout opportunities for altcoins like XRP, Litecoin, LTC, Mantra, OM, and Gate Token, GT. Analysts suggest that if Bitcoin resolves its range upwards, these cryptocurrencies could follow suit with significant gains. Bitcoin price analysis. Bitcoin is struggling against moving average resistance but shows resilience, with buyers holding the $94,000 support. A breakout above $98,500 could drive BTC toward $102,500 and possibly $106,500. Conversely, a drop below $94,000 risks a bearish double-top pattern, exposing the $90,000 level. XRP price outlook. XRP has formed a symmetrical triangle, indicating a potential breakout. A move above $2.84 could push the XRP USDT pair to the downtrend line and beyond, while failure could keep it range-bound between $2.64 and $2.84. Litecoin, LTC, technical analysis. LTC is within a symmetrical triangle, signaling consolidation. If bulls breach the resistance line, LTC USDT could surge to $141 and $147. However, a drop below $118 may push it down to $112. Mantra, OM, Market Insight. OM has been on a strong uptrend but faces resistance at $8.20. A break above this level could extend gains to $10. Conversely, a slip below $7.35 could trigger a correction to $6.73 or $5.92. Gate Token, GT, forecast. GT recently broke its downtrend but faces resistance at $24. Sustaining above the 20-day EMA at $22.22 could drive it to $26, while a drop below the 50-day SMA at $20.67 may signal a fall to $17.43. Will Bitcoin's breakout ignite a broader altcoin rally, or will bears maintain their grip on the market? 12 U.S. states invest $330 million in Saylor's strategy. As of late 2024, 12 U.S. states have collectively invested $330 million in strategy, formerly known as MicroStrategy, through their state pension funds and treasuries. Notably, California leads with the largest stake, holding over $150 million in strategy stock within its state retirement funds. California State Teachers Retirement System, CalSTRS, possesses 285,785 shares of strategy, valued at approximately $83 million, according to a Form 13F filing with the U.S. Securities and Exchange Commission on February 14. This fund, managing a diverse portfolio of $69 billion, also holds 306,215 shares of Coinbase coin, worth $76 million at the time of filing. Similarly, the California Public Employees Retirement System, CalPERS, holds 264,713 shares of Strategy, valued at around $76 million, and maintains $79 million in Coinbase stock. CalPERS oversees investments totaling approximately $149 billion. Strategy stands as the world's largest corporate holder of Bitcoin, BTC, with 478,740 coins valued at about $46 billion at current market prices. Investing in Strategy's stock offers an indirect exposure to Bitcoin's performance. The company's most recent acquisition involved purchasing 7,633 BTC at $97,255 per coin between February 3 and February 9. Beyond California, other states with significant investments in Strategy include Florida, Wisconsin, and North Carolina. The State Board of Administration of Florida Retirement System holds 160,470 shares, worth $46 million. The State of Wisconsin Investment Board owns 100,957 shares, valued at approximately $29 million. North Carolina's treasurer manages $22 million in Strategy stock. Additionally, New Jersey's Police and Firemen's Retirement System and Common Pension Fund collectively hold $26 million in Strategy shares. Other states reporting holdings in Strategy through their public funds include Arizona, Colorado, Illinois, Louisiana, Maryland, Texas, and Utah. In a strategic rebranding effort on February 5, the company transitioned from MicroStrategy to Strategy, adopting a Bitcoin-themed visual marketing approach. Since the start of 2025, Strategy's stock has appreciated by 16.5% and has surged an impressive 383% compared to the same period in 2024, outperforming the broader cryptocurrency market's 62% gain over the past year. This trend of state pension funds investing in Strategy reflects a growing institutional interest in cryptocurrency exposure. For instance, South Korea's National Pension Service, NPS, the world's third-largest public pension fund, acquired nearly $34 million worth of Strategy shares in the second quarter of 2024. This move signifies a broader acceptance of Bitcoin among traditional financial institutions. As more public funds and institutional investors allocate resources to companies like Strategy, the intersection of traditional finance and cryptocurrency continues to evolve. This raises pertinent questions about the future of digital assets in public investment portfolios. How will the increasing investment by state pension funds in cryptocurrency-focused companies like Strategy influence the future of public retirement portfolios? Argentine President Javier Milei faces fraud allegations over cryptocurrency endorsement. In a rapidly unfolding legal dispute, Argentine President Javier Milei is facing fraud accusations after his endorsement of a cryptocurrency token led to significant financial losses for investors. Multiple legal actions, including a criminal complaint and a class action lawsuit, have been initiated against the president, fueling a nationwide controversy. According to reports, Argentine lawyers have formally accused Milei of fraudulent activity related to his public promotion of the Solana-based cryptocurrency token, Libra. The token initially surged in value following Milley's endorsement on social media, reaching a market capitalization of $4.56 billion on February 14. However, after Milley deleted the promotional post, the token's value plummeted by more than 94%, triggering widespread claims of market manipulation and investor deception. A criminal complaint was officially lodged against Milley by lawyers Marcos Zelaya and Jonathan Baldoviezo, along with engineer Maria Eva Koutsavitis and economist Claudio Lozano. The filing, submitted on February 17, alleges that Milley engaged in fraudulent activity by endorsing Libra without disclosing potential risks or his level of involvement. Baldoviezo further claimed that Milley violated Argentina's public ethics law, which mandates that public officials declare their assets and any conflicts of interest. This incident is a clear case of fraudulent association, in which the president played a critical role, Baldoviezo stated, highlighting the severity of the allegations. As the legal process unfolds, a judge is expected to either take charge of the case or refer it to a prosecutor for further investigation. Meanwhile, prominent Argentine lawyer Agustin Ramboller has filed a separate legal complaint accusing Milley of fraud, illicit financial negotiations, price manipulation, and other financial crimes. Ramboller, a member of the political party Union Cívica Radical, has also announced plans to launch a class action lawsuit on behalf of investors who suffered losses due to the token's crash. Despite the intensifying legal pressure, Argentina's presidential office has not issued an immediate response to these allegations. However, following the token's collapse, Milley requested the Anti-Corruption Office to conduct a thorough investigation into all government officials, including himself. The findings from this investigation will reportedly be submitted to the courts for review. The presidential office insists that Milley had no prior knowledge of the cryptocurrency's details when he endorsed it and that he was not connected to the company responsible for launching the token. Nonetheless, Milley acknowledged holding a meeting with representatives from KIP Protocol, a blockchain technology firm, on October 19, where the company outlined its involvement in the project. KIP Protocol, which specializes in AI-driven payment infrastructure, has clarified that it served as a technological consultancy for the initiative but was not responsible for creating the Libra token or influencing its market behavior. However, skepticism has grown after analysts discovered that the Libra project's website domain was registered only hours before the token's public release, with no verifiable ownership details. As political backlash mounts, opposition lawmaker Leandro Santoro has announced plans to file an impeachment request against Milley, citing concerns over potential misconduct and financial impropriety. Given the severity of these allegations and the potential implications for Argentina's leadership, one pressing question remains: could this legal battle over cryptocurrency endorsement lead to a significant shift in Argentina's financial regulations and political landscape?